The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 18th terrific Tuesday edition of today's Trader's Edge show. I'm going to spare you the rest of the opening out here. Just simply, I have been under the weather. I have been dealing with this cold on and off for probably the last 6 weeks. Came back into full bloom yesterday afternoon. Certainly after the show, that was it. I was kind of kaput. So what we're going to do is I'm going to do everything I can to try to get through this show. But if I start just simply hacking away into this microphone, I'm just simply going to call it quits, so to speak, because it's not really fair to you. You don't want to hear me coughing and hacking. So we'll just kind of give the rest of the open, kind of a break. And I'm going to kind of be a little bit step it back one notch of energy. Doesn't mean I'm not going to give you the same great information. Just means I'm going to be a little bit more careful with regard to that energy level of mine. Now, I'd still love a call from you, 877-927-6648. Internationally, 727-445-1044. Of course, you can send me an email, steve@tfn.com, as Lauren did last week, and I didn't get to those emails. So we will do that. Take a look at Eldorado Gold and Rig. We'll certainly do that, and really anything else that you would like as well. Right now, we've got the Dow off 162, S&P's down 12. It's really the Dow percentage-wise that has leading the charge. New York Stock Exchange as well, 0.7% to the downside. S&P's off about 0.5%. NDX down about 0.4%. Gold is flat. It's up $1.70. Silver's down 23 cents, down $1.26. Light sweet crude is up 0.5% or 28 cents. Leading the charge to the upside, you've got Dycom Industries up 460. Cabela's Inc. up 370. Core Mark Holdings up 350. Lincoln Electric Holdings or something along those lines up $3. Domino's Pizza up 240. Now, I don't mind going off screen here for a moment and blowing my nose. I don't mind doing that because at least I'm not hacking into the microphone here. To the downside, you got Granger WW off $23. Ouch, that's down 11%. Priceline is off $13. Goldman Sachs, that's a stinger. That's down 5% off $12.76. Cardinal Health, speaking of health, down 11.5% out there. So let's take a look at the markets. Has anything changed since yesterday with regard to is the market forming a bottom? And my answer is no, but let me just go ahead and lay out the scenario so that you can take a look at it too out here. The first place, let's start. Let's first start here with the futures indices out here. Let's take a look at the four corners of the world. The ES in the upper left, the NQ in the upper right. Lower left is the Dow Equity Futures Contract. Lower left. Lower right is the Russell 2000. Now, what you can see here is that other than the Russell 2000, everything is still basically above profiles. This morning we saw the ES get down and test and reject 2330.50. The actual low, 2330.25 today. So that's a test and rejection of the bottom of its daily box. We know the structure of this profile is a bullish structure. So we're anticipating that this level is going to go ahead and hold. That says price ought to make its way up to the 2356 level at some point in time. If, in fact, price takes that out, 23.97 is what you should expect. This is going to occur between now and we'll call it the middle of May 15th, just to really call it the middle of May. The NQ has never even gotten down to test the bottom of it. That's the right-hand panel. I'll go ahead and blow this up on my screen out here. The NQ has never even gotten down to test the bottom of its key support level, 53.31 to 53.33. So this is more bullish than certainly the ES Mini as far as getting down to support, and in this case here, not getting down to support. The Dow right now is trading right on the support level. Equity futures contract, what I should say, 20,410 is what we're trading at, and the bottom box 20,413. Okay, so it's $2 below it. No big deal out here. Now, the Russell 2000 has tested and rejected its swing point several times out here. The swing point that I'm referring to is back on the trading day of March 22nd. It was tested and rejected back in April 6th. It was tested and rejected back on April 13th. Then again on the 17th yesterday. Today, it hasn't even gotten down there. So the weak indice is saying, guess what? I'm not as weak as I used to be. Okay, so that's what these are saying to us. If we go take a look at volume, schmolium out here, we got rejections all over the place. If you take a look at the Qs as an example, the swing point you're dealing with March 27th, 18 million shares. Yesterday was a total failure at trying to bust out those lows. It was a rejection on light volume. 13 million shares is all we did yesterday. Some might take a look at that as a low volume bounce, trying to set up an A to B equals CD or something like that. And that's a possibility. I'm just simply going to take it for what it is. Couldn't bust out the lows. That's a swing point from March 27th. Now it's going to go ahead and try to bust out the highs. The other piece of information that you and I have today that we didn't yesterday, let me go ahead and turn off a couple of things here. Let's turn off price. You're going to see that a brand name. Let me turn off the weekly profile. Did I do that? No, I didn't. There we go. We got a brand new profile that formed out here. So it does show resistance, some pretty stiff resistance about the 132.25, and 130.69 is your level of support out here. You get below 130.69, then it could be game on all the way down to the 129 area. But we know about the Qs. Testing swing points with light volume. In the case of the SPYs, you've done 43 million shares today. That says you're going to do about, 80 million, give or take. And if we take a look at what it is doing, well, that's the Qs again. Let's just type in SPY, see what it's doing. I believe its swing point has volume of, 87 million. Yesterday was a total rejection, 68 million shares, closing above it. You're testing it again today, in essence, with light volume. And it's not coming into that swing point with volume out there. So it's not going to be able to bust out those lows. That's the message of the SPYs. How about the diamonds out here? Want to talk about light volume? You've got it. Yesterday was a classic test of the swing point, a total rejection, that being March 27th, the top of which is 205.51, 4.5 million shares. Yesterday was a test and rejection with 2.2 million shares. Today you've done 1.4, 1.5. I don't know. What does that set up for us on a straight line basis? That sets up about, where is it? I think I had the numbers out here. Around 3 million shares today. 3 million versus 4.5. You can see, even today, even with Goldman Sachs just tanking the Dow out here, there just ain't enough juice to move these markets further south. Consolidate along these areas out here. Chop, chop, fizz, fizz. Oh, what a relief it is. Hey, and back to the IWM. We talked about, we looked at the Russell 2000 equity futures contract. The swing point is dealing with back on the trading session of March 27, 35 million shares tested and rejected. PS data just owns on 18 million shares yesterday. Folks, the message from a volume standpoint inside of the index ETFs is telling you it is Paul Revere or Stevie Rhodes running through the streets of these charts out here saying there is no volume to the downside out here. Is it you can't bust it down? I just say you're going to go ahead and try and bust it to the upside. Now, there's more than this out here. There are larger messages that are saying the same thing. When we get back from this break, hey, we made it through that first segment. Okay. You should have seen leading up to that first segment. Wasn't sure we were going to get on the air. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 144. Now, if we take a look at one of the ways I like to take a look at volume out here is using a Richard Arms Index. So most of you are familiar with the trend index, which is nothing more. That's just a mathematical calculation of taking advancing issues divided by declining issues. You take that number, and then you divide that by the advancing volume, which is divided. So the top portion of this quotient out here, I think that's correct. You got the numerator and the denominator, right? So the numerator is going to be your advancing issues divided by your declining issues. Let's see if I get my math correctly here. I know I got the equation right. I just don't know if I'm explaining it correctly. And then your denominator is going to denominate. How do you like that high-pitched sound there? Heck, you go on Singing with the Stars or whatever it is, right? You've got the advancing volume divided by declining volume. Now, you'll get typically, that's going to give you a one-day total. I like to look at it a number of different ways. I like to take a look at a 10-day exponential moving average of that number. I like to take a look at the individual day. And Thursday was an absolute classic because it accomplished really both. It accomplished here, in fact, during the last 12 months, we've seen four, Thursday being number 5 readings that were above 2. If you're looking at the chart out here, which I assume you are, let me do this. Let me turn off the one-day rate of change out here on this chart. So let me do that. That's going to make it easier. There you go. So now you're looking at the bottom panel, and you're going to see those readings above 2. Now, the simple explanation of this is that when it's above 2, a market is oversold. When it's below 0.5, a market is overbought. The oversold piece of it, and there are many people who use it differently. I know Basil Chapman is kind of a master. He's got a master PhD inside of the Richard Arms, but he also uses it a different way. I use it a little bit of a different way. I like to combine it with the one-day rate of change out here, but that was not in effect with regard to Thursday. But there was a rate of change that it was in effect with. So I kind of consider myself a master of many different tools out here, and you'll see those green arrows. Now, it doesn't always happen to the day, but when you get that reading, it's typically more than a one-day bounce. That means yesterday's bounce was really just the beginning of the bottom formation that is occurring inside of the S&P 500. That is what's at the top portion of my screen. At least what I can share with you is in the last year, that certainly has been the case out here. So you got that as one of the key components as to what is the market doing. Well, I mentioned that as just the one-day ARMS reading. You can then go ahead and do one of the Stevie's 10-day ARMS reading, where you got down to this negative, what I'll just say, the way the math works out and the way I do it and percentages and so forth, it gets down, my reading is minus 1.34 out there. Okay, it's Stevie math. It's consistent with regard to the 10-day. Now, you can see that is the lowest reading that we have received. Last time we got down to this level was May in 2016, so a year ago. Now, did the bottom come in on that exact day? Actually, you saw a little bounce the very next day, and then you saw a little bit of a sell-off for a couple of days, and then you saw the market move higher out here. There was an eventual bottom that came back in June. We're far away from that as we speak, the old June bottom out here. We're just really dealing with the April-May time frame. We got a real extreme reading back in January 2016. It took a few days before the bottom formed back then. If I take this back further, back in August of 2015, again, this is one of those, and you'll see I'm just keeping the blue line consistent here at the minus 134. You can raise it up. I usually think I use minus 1.25 or 1.2 as my examples as to when this tool really helps you to identify when the market. Now, we're looking at the New York Stock Exchange because those are the advancing and declining issues and volume that we're using for this calculation. So we had the one-day ARMS and the 10-day ARMS. It doesn't usually occur like this. When it does, it's really a glaring message. I say blaring. I don't think blaring is actually a word out there. It is when you're not feeling well. So you'll cut me some slack. So there was the messages there with regard to what the market is attempting to do. So you go ahead and you put it together with regard to can't bust out the bottoms, can't break through profiles, testing swing points with light volume, the trend index giving you a one-day, giving you a 10-day average that says, I don't think so. Yesterday we did see the summation index go ahead inside the New York Stock Exchange, get back above zero. It's now down below zero, so we keep oscillating back and forth around the zero level, but it's just dying. It just wants to go ahead and give you the all clear signal that price is now ready to move to the upside. The VIX index, volatility index, we all know that is giving us where am I? What did I do out here? What did I do? Oh, here we go. If we take a look at the volatility, speaking of 10 days, I like to take a look at the 10-day rate of change inside the volatility index, because when it gets up to Stevie's upper threshold level, we'll call 0.40, that's an indication of when the S&P 500 is beginning to form a bottom. Does it always happen to the day? No, not always to the day, but usually pretty darn close out here. So we had another one. This takes us back into August 2014. So now we're taking a look at several years worth of data, and you can see how this works out here. Again, it's a great tool for identifying what, in fact, the S&P 500 is trying to do. So we put all that together with the favorable seasonal cycle that we're in out here, and I hate to be the bearer of bad news to the bears out there, but it is what it is. Can I guarantee anything? I can guarantee I'm going to feel better soon. I just don't know when. But other than that, I really can't guarantee it too much. But what we have is I'll just simply lay out the facts. You can decide to ignore the facts and say, things are different this time. Then you might be right out there. Okay, so that's what the market is doing. Nothing really changing between yesterday and today out here, at least not as far as I can identify for you. No, I haven't had sushi for a while, Mr. Bill. That could be the problem. That could be the problem. So we'll have to correct that scenario real quick. It's more like I probably haven't had sake for a while. That could be the real problem out here. Okay, let's take a look at Lauren wanted to take a look at EGO and rig out here. In fact, before we go take a look at a mining equity, I'm sure the question is, somebody is saying, hey, that Japanese yen is simply falling apart out here. How come gold isn't moving up to the moon? First, the question you should ask, question I ask is that correlation still in effect out here? Well, let's go find out. Let's go take a look at our yen, our gold, our bond correlation. Top chart being Goldilocks. Center portion being the 30-year Treasury. Bottom portion being the Japanese yen futures contract. The reason why we switched over to the futures contract is because I have no delay and data feed, and it's also moving in the exact same direction out here. So for the most part, we could see a nice big down bar at 940 this morning inside of gold. Guess what? We had a little down bar inside of the 30-year Treasury and a down bar inside of the Japanese yen. Same thing on the very next trading session at 950 to 10. And then we started to see the yen move higher. What happened to the bonds? Moved higher. What happened to gold? Moved higher. So the correlation, remember, it is a directional correlation. It's not a pip for tick for tat out there. It's just simply a directional correlation out here. So it is in force as far as my eyes can tell. Now, mining equities, a different situation. So we get back from this break, and we go take a look at EGO or any other mining equity. We're just going to take a look at what is it doing in relationship to market profiles, breakout levels, volume, things of that sort. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go check out EGO is one of the ticker symbols here that was requested. EGO, Electric Light Orchestra. Don't I wish. But this is El Dorado Gold. I think they used to sing that song, El Dorado, did they not? Now, in the case of El Dorado Gold out here, formed a seventh wave move a couple of days ago. seventh or third wave out here. So oftentimes that can be the sign of a top. But I say, let's go take a look at what volume was doing as it was coming into the swing point out here, because I don't think it's a top inside of El Dorado Gold out here. The volume at the swing point from February 8th was 7.1 million shares. And as price was coming into that level was 11.5 million shares on April the 13th. I don't think so. Meaning, I don't think that it's a top. So if you're in El Dorado Gold out here, look, you're dealing with the resistance zone, the top of its weekly profile. You'd sure like to see price close above 370 this week out here. That would be because this profile is structured from a bearish standpoint, meaning the point of control, the center of the box, closer to the top of the box. So closing above that would be very, very bullish out here. You were moving into a swing point with volume. You're probably going to go ahead and take it out and continue moving higher. Support on this thing is 329. That's for sure. You had a breakout at that level. You got the bottom of the weekly box. So I don't see anything wrong with Electric Light Orchestra or EGO out there. The other request was to take a look at the Rigatoni out here, Transocean Limited, RIG being the ticker symbol. Now, this, I think we talked about this before, in that it is very likely pulling back to its breakout area, which is $11.10. When I say breakout area, I mean true break dancing. You moved higher, or RIG, on November 30th with 43 million shares out here. You're pulling back into that breakout area with light volume. So if you're in this, you should anticipate price is going to get down there. Now, it could actually get down to the bottom of that swing point from November 29th, which would be 1062. That would be your ultimate buy area. Test that with less than 22 million shares. You know, that would be your volume swing point analysis buy type of scenario out here. But at this stage, you're underneath the breakout. You're into the gap out here. And so that says to me, you know, you're probably going to go down and test that 1110 level out here. It doesn't really matter what wave counts we're in or anything at this stage. You know, that is the message until you break out of the, and by the way, the breakout, the level that you have to close back above for it to be rejection is going to be 1182. Okay, so that takes care of that. There's a question. Let me see. Yes, sir. Can you kindly share what it is you look for as a clue that would hint NDX declining 250 to 500 points from here? Thanks. I'm giving thought to that question myself. So, yeah. So what would I look at specifically with regard to the NQ? So that's a great question. What would I be watching today to give you a clue? Because that was what the question was. What's the clue? So here's the NQ 30-minute chart. We could put any time frame we want out here. I'm actually going to go ahead and turn off price and volume. So your first clue, because I think that's what the question was. Let's turn off price. Let's turn off that descending trend line out here. Where the Sam heck is that? Where is that? Oh, I think I have to turn on price first. I got to turn these things off in order. Okay, here's what I want you to take a look at, Mr. Z. Notice that the current 30-minute profile, notice how you only see two lines out here? I hope you can only see two lines. If you can see three lines, well, then you stop the drinking. But you'll see that the in the data box says bottom 5378.07, says center 5378.07, top 5393.52. The center and this is my experience, the center and the bottom being at the same level is telling you this is significant, massive support out here. So your first clue is you have to see a close below that. Now, if you see a close below that, you'll see the red squiggly line at the bottom of my screen. You see how it's really just below zero? So our price oscillator is just below zero. If you break that level, this is going to turn down even further, and there's nothing more bearish than a falling price oscillator. Now, that's not going to say 250 to 500 points from here. What it's going to say is it's your first clue. It's just your first clue, your first signal. Likewise, if it holds, you need to anticipate 53.94 is going to go ahead and get tested again. So if we go ahead and we put price back up here, looks like that's right. This level has held. Look at how many times since this profile formed, which was at about 7 o'clock this morning. Look at how many times this thing has held, right? This little booger has held out here. And you talk about a wide-ranging bar, talk about price coming back to the breakout at 9:30 a.m. this morning. That's all this has done. The NQ just came back. Now, look at what we are starting to form here. We are starting to form higher, lows, and we are starting to maybe form higher highs out here. So your other clue that 250 to 500 points to the upside, and I'm not saying 250 to 500 points to the upside, I'm just saying that the upside is where you should be looking, is if we in fact take out the highs of this morning. So if we see price move about 54.05 and a quarter, and we start seeing these higher highs and higher lows, guess what? All those other clues that you and I looked at, no volume to bust out the bottom, market profiles on a daily basis that have held, trend index readings on a daily, on a 10-day that have said, this is how the market forms a bottom. These are the real clues. If we change this to the 120-minute time frame, okay? So we'll change this, and at the 120-minute time frame, you can also see, and here this is going to give you, because you might have said to yourself, why did the NQ, you might have been pounding the desk just like me, why did it stop where it stopped today? Well, here's our answer. It stopped because that was the 120-minute time frame top of the box. Now, we can also see we're really right at that zero line, right? If you take a look at this price oscillator reading, where it dipped down below zero at about 2,200 hours back on April the 5th out here, its signal was, even though price had kind of moved a bit higher, right, we're just kind of straggling along. But this, when you have the price oscillator below zero, stays below zero, that is when you're going to see the most price destruction. Potential price destruction. Okay, when it is above zero, take 2,000 hours at March 27, and take a look at price came back, tested the market profile, boinged off of that. That's a technical term for I'm going to go ahead and move higher, and in fact, that's what it did. Price oscillator above zero out here. This is not going to be a timing tool to buy the top tick or sell the top tick or buy the bottom tick, but it's going to be a terrific tool for letting you know what kind of C's are to come out here. And I'm not talking about ABCs. I'm talking about, the nice type of C's like, hey, is there huge waves ahead, or is this I could just sit back on my big yatchet and just simply cruise? Pour me an adult beverage, please. So watch in the 120-minute profile out here for a break of that 54.0375 level. It's just going to be a signal that prices are moving higher. And what we also have out here, you got a trend line. What actually did the NQ do? The NQ broke through that trend 2 o'clock yesterday afternoon. That's a short-term trend line coming from the highs out here on April 5th. Breaks it. What's it do? Comes back and tests it, rejects it, tests it, and rejects it. This is just nothing more than typical Bud Rolf's textbook trend line. Another rejection of price moving lower out here. So, Mr. Z, I hope that helps you out. This is what I would be looking at as the clues in addition to what we already looked at earlier. Steve Rhodes from TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 122. So I started taking these Zycam things, these little things that you stick up your nose and pray. And actually, it seems like they're working pretty well compared to the last go round. But I've even started taking these Mucinex things, and it's no fun. I'll do the best I can to be here tomorrow, but I can't guarantee that one. If I feel like this, I'm just hanging it up to some R&R, some rest and relaxation. They're probably going to the doctor and saying, "Can't you just shoot something into me and just simply, get rid of this nasty, nasty crud?" Doctor's going to say, "Hey, stop working out." In any event, let's take a look at. I don't know what else you want to look at out here. I don't see any emails. And we only covered one gold equity out here, but one of the things we looked at, or I mentioned, the Japanese yen, and you're exactly right. It is moving lower out here. We're in one of these precarious situations. Can I say precarious? Because we do have the completion of an A to B equals CD pattern. We did get a bullish reversal signal yesterday. We don't have any follow through today. We do have a brand new market profile that formed. So unless the 108.47 level fails, I'm not sure what gold really wants to do here. And you know what? Gold isn't really sure what it wants to do here either, is it? All right, we've seen where bonds are just saying, "Man, I'm taking this Q here, and I'm moving higher," and they got a long way to run to the upside. But gold is saying, "I don't know," and that's why you've got gold up $1.70. Because it knows what took place yesterday, and it's just afraid that there's a sniper right around the corner. And that sniper just doesn't want to get doesn't want. Now that doesn't change the longer term outlook for gold. That doesn't change it in my mind out here. And you're also seeing the mining equities behave the same way. They're just uncertain out here. If we take a look at the GDX, you do have a brand new profile. So this is helpful information to you. It says that if you were to see a close below 2376, the signal to us would be, well, let's just say below 2361. You know what? You could go ahead and take a run for the previous swing point low at 2114. But you'll have to see the yen reverse directions from where it's at right now. So nobody really wants to do anything until this guy busts out, gets below yesterday's low at a minimum. This gal, being the Japanese yen out here. So it's if we take a look at Let's go do it. We take a look at bonds out here. The bonsai pipeline is headed to, let me get rid of the weekly profile out here. First, you've got an A to B equals CD to the upside. So it's a foregone conclusion, 156.44. That is not the A to B equals CD pattern that it wants to fulfill. It wants to get up and do the 1 to 1.272. I know people are going to say, how can that be? It's because of all the signals that were out there. 158.15 is the number where the 30-year is eventually headed to. Okay, so what else should we look at out here? I guess we go look at. Let's go take a look at some stocks that are moving, right? Let's go take a look at Goldman Sachs out here. So Goldman Sachs. Let me go turn that weekly profile on just so we can have an additional piece of information in case it presents itself. So we know this thing is busted through a swing point with volume, like 9.2 million shares today. It's coming into the area where this thing had broken out. The problem is there are so many breakouts inside here. The one that just sticks out to you and I is the trading day. Well, the real breakout was from November the 8th. So November the 8th was trading at 182.68. You're 214 right now. It's possible. I mean, that's a wide open. That could be game on out here. But you've got other breakouts or other levels of support out here, right around the 204 area, the top of, is it the top? Let me see, 204.67 actually. Looks like because of my inaccurate, let me see if I can get it right for you. There we go. Let's try it. There we go. Now we got 204.67. That could be a place where a price level where Goldman Sachs finds some support out here. But this, in the last breakout, most recent breakout was on November 30th with 6.5 million shares. So you're already really breaking through that area. And will Goldman Sachs put a little bit of hurt inside the Dow? Yeah, absolutely. We'll put some hurt inside the XLF? Gosh, absolutely. So it looks like Goldman Sachs has further to go before it finds its footing out here in the market. I don't know how the other, right, you've had Bank of America, other stocks like that are out, BAC. Let's just take a look at it, see what it is doing in a sympathy trade, saying, hey, not too bad out here. The swing point in that it's dealing with was back on March 27th, 119 million shares. Yesterday tested, rejected on 85 million shares, today 102. So Bank of America is doing just fine. It's just Goldman Sachs. JP Morgan, let's go take a look at it. I don't know if they've released numbers yet. It's got a brand new profile that formed today. This doesn't look too shabby out here. So primarily Goldman Sachs being the culprit inside of the Dow, inside of the XLF, which is off 19 cents, 46 million shares to the downside out here. Let's look at Granger Worldwide. What the Sam heck happened here? GWW off $25 or 11% out here. Let's go try to figure out where this is going. Big volume coming out of this equity, 3.9 million shares today. Looks like we've got to probably put this thing on a weekly chart to get any kind of feel for where it's headed to. And we should probably just turn off our market profiles. They're not going to assist us in this matter. So, yeah, so it's pretty clear, right? If we just take a look at swing points of where this is headed to, looks like back in the 180, 176-ish type range out here. That is for GWW. No telling if that's going to go ahead and support price, but it looks like that is where that is headed to. What else? Cardinal Health. Speaking of health or poor health, Cardinal Health is off 10 million shares, 11.5%, $9 to the downside out here. This is trading into its swing point. That's the weekly swing point, 25 million shares. You've done 11 million shares already. So pretty good chance that if it closes underneath 71.97 or 72.49, then this is going to make a run for the 62.70 area. CAH is the ticker symbol there, Cardinal Health. JNJ for top dog inside of the Tigers Den. Let's go take a look at it. Excuse me, need some hydration going on there. Top dog. If we take a look at J&J, gapping down today, volume behind the move so far about 9 million shares. Let's go ahead and turn this thing off. This thing being the A to B equals CD to the upside. it looks like you got to just simply have a confirmed A to B equals CD out here. Now, that says that you can start to approach any one of a number of levels out here. The 1-to-1 has basically been hit or close to 120.84. So that's not going to be what's going to stop Johnson & Johnson. You've got additional levels out here, 119, 117, 115. Seems like one of those three levels out here is where this is headed to. If we go turn on weekly profiles, you're below the weekly. So there's nothing to help you here inside of, well, actually, I take that back. The weekly profile, 120.81. If it breaks through that, top dog, then you're looking at lower prices, 119, 117, 115. GPL, question is, has Great Panther bottom? And Duffmeister, he got a little doji in the window today. It's not an indication of a bottom. Excuse me, I'm sorry. Dojis don't mean anything to Stevie as prices moving lower. Only as prices are moving higher. It's just taking a breather. I think it has lower to go. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks, for Don. Let's go take a look at ticker symbol AES. Stands for AES Corp out here. And Don has been long this since February. And, what we see out here, Don, let's just put this on a longer-term chart first. Let's just put this on a weekly. See if we've had any significant test out here to provide us with any information. So let me do that. And what sticks out to me is this swing point right back here, the week that began May 16, 2016, 21 million shares back there. And it's been tested with, 30 million, that wasn't good. 30 million again, 26 million versus 21. So now kind of fast forward to the most recent tests, still 23 million shares out here. So it keeps bumping into that level. Most recent last week was 30 million. So you've got a bounce that's going on out here. And this suggests to me, I'm going to put this back in the daily time frame, that AES is likely to find resistance, kind of like where it traded into yesterday and today, which is at the price point of 1185. I meant 1143. Excuse me. 1143, and or it could in fact bounce a bit higher to 1153, the top of its weekly box out there. But that may be all that you get. In other words, this may take another run for those lows. You'd really like to see this thing peter out and just run out of volume at the lows out here. The other thing you'd really like to see is you'd love to see this price oscillator, this is a daily chart, get above zero. You and I, we took a look at that price oscillator. We looked at the 30-minute chart, 120-minute chart for the NQ to try to answer our question, hey, what would we be looking at for clues that the market's going to cruise to the downside versus what are we looking at for the market to cruise to the upside? And you've been below that zero level since October of 2016, and you'll see that you really just haven't done a whole heck of a lot. Every attempt to move higher has been thwarted, if we can go ahead and use that terminology. So I think at this stage here, you still have a struggle with AES. That doesn't mean, you bought it in February, you might be near the bottoms out here. I don't know anything about the company. We're just not seeing everything that you'd probably like to see for this equity to move higher. The other thing you'd really like to see is you'd like to see, brand new profiles forming above the prior ones out here. So you should have good support at 1103, but you've got really good resistance at 1143 and or 1153. Thanks for writing in. Thanks for listening. And all of that jazz. So I think I've gotten to each and every request that is out there, and so we have just a minute to go. That's a beautiful thing. We survived. That's a good thing. Wasn't sure that we were going to be able to survive the show today. So what else can I really provide for you for your listening pleasure? Not much. I think we've pretty much covered it all. Take a look at one last thing, maybe the XLK. What's the number one sector inside the S&P 500 doing? Let's go see what it's doing. So its swing point takes you back to March 27th, 6.8 million shares. That was tested with 9.7 million shares. Couldn't bust it out. That was on Thursday. Yesterday, still not a close above it. So watching, if the markets are also, the S&P is going to move higher, you're going to see the XLK close above 52.95. And if it does with less than 6.8 million shares, says you're going to go tag the 53.66 area. So, folks, stay tuned. David White, your favorite polar bear and mine, he's up next. Tom O'Brien from 3 to 5. Andy Heck from 5 to 6. I'll do what I can to be back with you tomorrow at 1 o'clock. Have a great day. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.